In this video, I will be showing you why it's crucial for a notary loan signing agent to exist in the mortgage lending industry and what actually happens in a loan signing appointment. In order to understand the notary loan signing industry, you must take into account all the professional services related to the industry. Every single real estate transaction employs over 20 different professionals. In other words, every time a person buys a piece of property or refinances on his or her existing loan, there's a vast selection of real estate professionals needed to facilitate that transaction, each and every single time. Some of these real estate professionals include real estate agents, home insurers, property inspectors, funders, mortgage underwriters, mortgage officers, transaction coordinator, escrow officer, title officer, appraiser, loan processors, lawyers, surveyors, and so on. See, on that same list, we must include the notary loan signing agent. But why is it absolutely crucial for the notary signing agent to exist on this list? Because that's how the government safeguards the borrowers and the lenders in each mortgage transaction from fraud. Essentially, a notary loan signing agent is an unbiased third-party official. They are there to be a deterrent to fraud, and they don't have a vested interest in the actual transaction. So for example, a realtor is generally motivated for a sale to happen so that they may earn their 6% or 3% commission. Would hiring a realtor to guide a borrower through a stack of loan docs increase the odds of fraud? I say yes. The odds would increase because a realtor might be more inclined to persuade a borrower against their own interest in exchange for a commission on the paperwork. In this example, they have a vested interest in the transaction. Now, I'm not attacking realtors or saying that all realtors are fraudulent, but this is just an example to illustrate how crucial it is for a notary loan signing agent to exist in the transaction. Let's put it this way. A notary loan signing agent must wear two hats. On the one hand, he or she wears the notary public hat. Here he identifies the signers, notarizes the documents, administer oaths, and establish that the signer who knows exactly what he or she is signing. And on the other hand, he or she wears the loan signing agent hat. This hat is to guide the signers through the loan documents and provide general description for each closing docs, all the while showing the signer where to sign and date on the paperwork. So what's important to note is that a notary signing agent is not authorized to provide legal advice or discuss beyond the general purpose of loan documents. So any discrepancies or specifics related to fees, rates, or other loan terms, those things are generally directed to the lender or the closing company. Now, how amazing is that? The way I see it, you get paid anywhere between $80 to $150 per appointment or per hour for simply explaining the basics, in other words, the basic purposes of loan docs to people. And if there's any discrepancies, you're legally obligated to call the lender for assistance. The other great thing is it doesn't require you to be a sales agent because this is not sales. The lender already established the numbers and went over the paperwork with the borrower before you even met them. There's generally nothing on the paperwork that they don't already know about. You're really just there to guide the signer and verify that everything they already discussed with the lender is in good order. That's why it's crucial for signing agents to be there in the first place, because they act as an extra pair of lenses for verification purposes. So as you can see, it's a win-win for all parties involved. No sales background needed, and having a college degree is not a requirement to get started. So that's it for this video. Hey there, thanks so much for watching. If you liked this video and you found it useful, please give it a big thumbs up, subscribe if you haven't already, and I'll see you in the next one.